So now that the low time frame agrees from a structural perspective, we want to, number one, use imbalance to identify open price ranges. Number two, use last candle before the impulse to identify areas of supply and demand. And then we would be ready to start making our trades. So we have an efficient range now that the market has filled that previous area of demand that we just looked at. We've had a lower time frame shift in structure, forming higher highs at this point here. We've then had a pullback to fill this imbalance or this market inefficiency, and we've had a retest of this demand zone. So if we were to place our buy limit on this demand zone with a stop loss just below the low, and once again following that same thesis of targeting previous highs in the trend, such as this open imbalance supply zone, we would be able to get a confirmed entry from there. And the reason we call this a confirmed entry is because we haven't just worked with this higher time frame structure to find the position, but we've actually now seen the exact same thing taking place on a lower time frame. So we basically have this exact same format happening on a smaller scale, which means the high time frame agrees with the low time frame, which gives us the highest probability entry for our positions.